Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from RatesEvolved, brought to you by Viable Markets, the industry's only global interest rate conference. Joining me for this segment, we have Jim Hraska. He's the General Manager of FICC Services over at DTCC, and we're going to focus on resilience and risk management in the Treasury markets. Jim, thank you so much for joining us on set. Now, the Treasury Market Practice Group, they're putting a lot of focus on resilience and risk management in the Treasury markets. Can FICC address these issues and some of the risks that were outlined in this paper?
Yeah, no, most certainly. I mean, I think the Treasury did something, Treasury Practices Group did something interesting, where they focused on the fact that even though the underlier treasuries are risk-free, the market itself is not risk-free. There's a lot of issues that could happen, as a result of kind of the way that the trades are executed on a bilateral basis and the different venues in which they can clear and settle in. So, from FICC's perspective, with the real-time trade match, novation upon match, right? So now everybody has the same central counterparty, trade guarantee, netting, settlement, balance sheet optimization, centralized liquidity sources and risk management. All these things sort of bring safety and soundness to the market. And in addition, it actually solves the fire sale concerns that were brought about from tri-party reform. So it's something that we're very proud of, as we kind of expand into the different markets. We think, this will kind of help bring the market together.
Well, it's really interesting with the fixed income market. Trades can be submitted to clearing. I mean, obviously that's an important goal, but there's no regulatory mandate requiring clearing in the U.S. Treasury market. So what might motivate market participants, particularly on the buy side, to participate and gain access to this?
I think the first thing that would motivate them is capacity, right? So after the financial crisis, what ended up happening, is that people shrunk their balance sheets. The new SLRs and other kind of regulatory mandates caused people to optimize with their customers, and what they ended up doing is optimizing with their best customers, but that left a lot of people on the sidelines without capacity. And so I think the products and the services that we're offering are offering basically ways for the buy side to come in a way that's capital friendly for the dealers and the banks, right? So that allows capacity to return to the market.
Well, there's a lot of buzz around the FICC sponsored member program lately. It's been around since 2005, but it's getting a lot of interest now. One, explain to us what the program is and why is it gaining more momentum?
Sure. So that's a program, as you said, it's been around for a long time. It was designed by State Street with FICC as a way for them to bring in their registered investment companies who had cash to invest into the market. In an economic sense, a way basically that made sense for State Street to do that. So, back in 2005, there wasn't a lot of focus on, balance sheet return, and sort of capital and things like that. But after obviously 2008, all of that changed. And so, the market went through a period where, they did some of the things I mentioned before. They optimized with their clients and they put things in the clearing that they could. But at some point, they ran into a roadblock, right? So what FICC tried to do is figure out, look, how can we bring, the buy side into the market? So the first thing that we did is we said, look, well, let's take a look at that program and let's expand, what type of clients can be brought into clearing. So we went from a registered investment company to a qualified institutional buyer. And what that change did is it brought not only additional liquidity providers beyond RICS, but it also brought collateral providers to the table. And what was interesting about that, to really have a true cleared market that's going to work, you need to bring both the long side of the equation and the short side of the equation, right? So this kind of opened up the door. And then, so the second round of interest came from, because, one of the original rules of the sponsored program was that you needed to be, in order to sponsor, you needed to be a well-capitalized bank. And so a lot of the dealers and other, like foreign banks that couldn't participate have said, look, we're either well-capitalized or very sophisticated, we should be allowed to sponsor. So right now we have with the SEC under consideration another expansion proposal, and that's actually focused on who can be a sponsor. And what we're proposing is that anybody who's a full-service member of the Clearing Corp would be allowed to be a sponsor. We will have activity limits, which will be based off of people's, capital and what type of activity they bring in. So what it allows everybody to do is it allows everybody to participate in the Clearing Corp from a sponsoring perspective that's a member. And it also allows tremendous opportunity for buy-side participants, whether they're traditional buy-side participants or whether they're all, hedge funds, alternative asset managers, to come in. So again, kind of opens up the door for more participation. So,
and then these are some of the enhancements that we can look forward to from FICC in terms of risk management and added capacity.
Yeah, I think, the risk management components of FICC are all there. We're going to continue to kind of manage the risk, the way we do, very conservative fashion. For the sponsored program, the neat thing about that is what we do is we monitor and margin those sponsors on a gross basis. So very similar to swaps and futures. So to the extent that one client's long, one client's short, we don't negate that and make that zero. We collect gross margin on that. So it is very protectionism of the CCP. But what that does allow additional capacity, and it does allow the markets to kind of stabilize more from where they are today.
All right. Thank you so much for joining us. Always great to get some updates from DTCC.
I appreciate it. Thank you very much for having me,
And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.